Good afternoon and good morning to everyone. Thank you so much for taking time out of your busy schedules to be with us. A special shout out to our team members in Notre Dame studios. They were with us last night until past midnight, helping to execute Notre Dame Day, and then they're up bright and early in the morning again, handling the many different media demands of the university, and are again with us this afternoon. So they're a wonderful team behind the scenes, and we're very blessed to work with them in a close way. It's a gorgeous autumn day here in South Bend. The campus could not look more beautiful at this time. Let me, before we begin with our interview, give you a few quick updates. First, the coronavirus update. Right now, in the South Bend community in St. Joseph County, our numbers have spiked. We're at an all-time high. Our hospitalization rates are at an all-time high. The state of Indiana, like much of the rest of the country, and for that matter, the world, has seen a very significant uptick in positive cases and in hospitalizations and in deaths. At this point, we have been banned from travel. People who are residing in Indiana or visiting Indiana from more than 20 states across the nation without a 14-day quarantine prior to travel. So fortunately, things on campus, while we saw kind of a rise in cases after the Florida State football weekend, they've pretty much plateaued. We're not near capacity when it comes to isolation and quarantine beds on campus. But again, something that we're staying vigilant about in these last 4 weeks of the semester. Be assured that we will be doing exit testing for every student before they're released from campus. The final day of finals is November 21st. And we will also have entry testing before they come back for next semester on February 3rd. We are excited about our next home football game, November 7th, against Clemson. It is going to be a huge game, probably the most highly anticipated college football game of the season. Students and the community and at large are really revved up about the game. One thing I want to caution you about is if you're thinking about coming back and going to the game, we're going to be exercising a great deal of scrutiny for those that are students or faculty have to have a photo ID, a Notre Dame photo ID to enter the game. So if anybody's thinking about picking up some tickets on the side, be forewarned that without a Notre Dame photo ID, it's going to be very difficult to enter the game. And especially with the surging numbers, we really want to be careful at protecting the community here through the end of the year. A couple other updates. Notre Dame Day was held on Monday and Tuesday of this week. It's an incredible opportunity for us to tell Notre Dame's story and its many and varied and powerful dimensions. We had a student focus this fall. So many students from many different dorms told their amazing stories and shared their intellectual curiosity, which is far-ranging. We had over 84 foreign countries actually tuned in for the program. We had over 23,000 gifts that were made through Notre Dame Day, raised $1.9 million, so much of it for medical research, a great deal of it for student clubs, and a large amount for the financial aid needs of our students. 733 different causes benefited from Notre Dame Day. So thank you for participating. If you missed it or you want to see different segments of it, the Notre Dame, the ND Loyal YouTube channel will be broadcasting the different segments, the different interviews, and you can go there, or it'll be distributed on many different forms of social media if you want to pick up some of the interviews that you might have missed. Finally, last night we had an amazingly beautiful and terribly sad remembrance mass for the two Notre Dame first-year students who were tragically killed this past Saturday as they were struck by an automobile. Valeria Espinel, 19, from Guayaquil, Ecuador, and Olivia Lara Rojas, 19, from Santa Cruz de la Sierra in Bolivia, were being remembered at this Mass. And then a third student, a sophomore, Eduardo Jose Elias Calderon, who is from the Dominican Republic, was hospitalized but has since been released. Father John presided at the Mass, and Father Pete McCormick, an amazing young priest who heads up campus ministry, provided a beautiful homily, and over 3,500 students attended the Mass last night, and which was live streamed to many thousands more. I ask everyone if you would please keep Valeria and Olivia and their families, the other students who they were close to here on campus, especially the Latin American family of Notre Dame, all very close in your hearts and prayers for the coming weeks and months. It's now my pleasure to introduce our special guest, Mike Donovan. And let me say just a few words first about the Notre Dame Endowment, which he has helped to guide for the last 23 years. This past fiscal year ending June 30th, the Notre Dame Endowment had a return of 7.4%, which was one of the highest among any schools in the country. It compares to a 3% return for that same period for the strategic policy portfolio. And more importantly, Notre Dame's annualized rate of return is 10.2% over the past 10 years. So we always take a look at those longer term horizons. The market value of the Notre Dame Endowment, which is actually over 6,500 distinct endowments that have been pooled, is $13.3 billion today, which is the 10th largest endowment for any college in the country, and it's the largest for any Catholic institution in the world. So we're very grateful to have with us a Vice President and Chief Investment Officer, Mike Donovan. Mike is, as I mentioned, been with us for 23 years, and he's overseen Notre Dame's private equity investments during that period of time. Prior to Notre Dame, returning to Notre Dame, he co-founded a successful educational products company. He practiced law with Morgan, Lewis, and Bacchius in Philadelphia. He continues to be an advisor or board member for many charitable organizations and private capital firms. Mike has his BBA in finance from Notre Dame, class of '84, and he has his JD from UCLA School of Law, and he has his MBA from the Harvard Business School. So he is well credentialed. Welcome, Mike. Thanks so much for making the time to be with us. Mike is a classmate. We're classmates from 1984. I envy his youthful looks and his thin waistline. But Mike, for 23 years, you've served as the managing director, and as your close friend and co-worker, Scott Malpass, stepped down, who also was your college roommate back in the day. You took over the leadership role and what has been a seamless transition. Scott always pointed to the success of our investment portfolio was all about a team, and that you guys have assembled an amazing team of leaders. Can you tell us a little bit more about that team and how it's structured?
Absolutely, Lou. First off, it's wonderful to be here. Indeed, after 23 years working side by side with Scott, the transition here has been as seamless as one might imagine. And you hit it. It's all about the team. We've been so fortunate over decades that the university's support has allowed us to build what is a full-fledged asset management firm. We've got 37 people. We have our own embedded accountants, our own IT professionals, our own embedded internal counsel. Our core investment team, all Notre Dame grads, the top 5 folks average about 20 years of tenure. So it's a big operation. Of course, what makes it unique and distinctive is it's Notre Dame's operation. Unlike many of our peers that have relocated away from their campuses into cities where maybe things are a bit easier in terms of executing the work, we've not only built a team that's highly credentialed and capable, but really committed. And when I look around in terms of our peers, in terms of the stability of our team and the commitment of our team to the mission, it's really what's been the anchor, I would say, of our success.
You guys have been amazing, Mike, in that you've also been so student-centered that you provide internships for our students and you help with their education along the way. And then you've taught a number of classes and lectured classes and have partnered with our finance department in ways that I think, again, is unique in higher education investment offices. Can you tell me a little bit about the strategic partners, investment partners that you choose? I know that this is really critical. You could give us a sense of how many strategic partners you have across the different asset classes, and how do you choose them, and how do you assess them, and do you make decisions to move from some and pick up new people over time? Give us a little sense of that.
Absolutely, Lou. Yeah, we work with well over 100 of best-in-class investment firms, literally around the world. And they come in all stripes. We work with some of the largest asset managers in the world and some of the smallest. On one end of the spectrum, some of our partners are managing hundreds of billions of dollars. We partner with some who are managing 20 or $30 million. Literally, some new, established in recent years, some that are celebrating 50 or 60 years of excellence. So it's a broad cross section. So we're very much not check the box investors in terms of what we're looking for. We're looking for excellence, and we're really looking for a unique set of traits. Warren Buffett said it well. He said, give me somebody with brains, energy, and integrity, and they could do any job. And somebody smart, hardworking, impeccable integrity. We also look for firms and individuals with courage, discipline, and humility. In the investment world, those 3 things are hard to find in combination. You need courage because you have to have the guts to be a little bit different if you're going to outperform the averages. So you have to think differently and have the courage of your convictions. Markets are tough, they cycle. And the worst thing any investor can do is capitulate. So we look for partners who have real courage in terms of their approach. We also want ones that are disciplined. Because oftentimes when you partner with really good asset managers and they have success, they can't avoid the temptation to raise additional assets or launch additional products. And more often than not, that doesn't lead to continued success. So courage, discipline, and then that sense of humility, because markets are tough. And the one lesson and we've all learned over time, there are no geniuses. Everybody makes their mistakes. It's super competitive. It's only gotten more so in terms of with technology, capital flows, information flows. Having a sustainable edge today is harder than ever in the capital markets. So on an individual level and on a firm level, those frankly are kind of the 6 characteristics we look for. And then around that, we're looking for things like edge, alignment of incentives, that our partners only do well if we do well. And that real sense of fiduciary duty. Some people's risk tolerance changes when they're managing other people's money. We like people who their risk sensitivity goes up rather than down. But there again, that's more the exception, I would say, than the rule in the world of investing.
Yeah, and you certainly, and knowing you personally now for many years, you certainly embody those values, which is going to make this a tougher interview because you hate to brag. But one of the things that I know that the Notre Dame Investment Office is so highly regarded by so many of our investment partners and beyond. Many people want Notre Dame to invest in their firms and so forth, but those partners have given us access to things that the normal investor can usually not get into. There's been early investments, right, in play in Yahoo and Google and Alibaba. Can you give us a sense of how Notre Dame's kind of reputation and relationship capital has helped us to get into a diversified portfolio with access that most average investors could only dream of?
Absolutely, Lou. As I mentioned at the start, in many ways, we look like other asset management firms, but our calling card is we're managing Notre Dame's money. So when we make a phone call, it gets returned. When we ask for a meeting, yeah, we get that meeting. Our alumni base, our network, the Notre Dame family is a huge resource and an asset for us. Also, the fact that we've had stability, and it's very much a relationship business. I'm now in my 24th year. We've got directors who are in 20 plus years. In terms of accessing interesting opportunities and getting first calls, it's definitely a huge advantage. And the key to that access, of course, is Notre Dame's brand and reputation and mission. Some of the best firms can pick their investors, and they have limited capacity. And so the idea of working to help an institution like Notre Dame provide scholarship monies, do important research, fellowships, really resonates with our partners. And we try our best to bring them to campus. Every couple of years, we host our partners for a football week, and we want to tie them to our mission. It's important to us, and it's important to them. So, yeah, in the realm of a really crowded, competitive investment landscape, what really differentiates us is the nature of the capital and the mission for which we're working.
That's great, and it's wonderful to see how you develop those lifelong relationships in many cases with these firms and their leaders, and that they buy into Notre Dame's mission. So many of them have ended up sending their kids to Notre Dame because they've been so impressed by by you guys and the way that you conduct business. Tell me a little bit about one of the things that seems to be counterintuitive is that while there's been a lot of economic dislocation associated with this pandemic, the markets have stayed, the public markets here have stayed pretty high. How do you prepare, and with a presidential election on the horizon, how do you kind of look for what everybody expects to be kind of a downturn at some point? You never can predict exactly when, but do you hedge against that? And, what are some of the leading indicators that you look for before there might be another hike in interest rates from the Feds?
Sure, Lou. A lot there. The big questions, timing of vaccine, outcome of election, scale and scope of the next round of stimulus. We don't know and nobody knows. And they're all really profound issues that can move markets one way or the other very powerfully. So we recognize that they're unknowables, but they're unique events or risks, if you will. And there's others looking around the world: Brexit, China-U.S. relations and tensions. So there's a lot happening and a lot to calibrate. Our starting point's always, in all environments, but particularly environments like we're in now, is to stay balanced and stay liquid. And balance, of course, is diversification in terms of sectors, strategies, geographies, making sure that we understand what the correlations are across our portfolios. And in an environment like this, we always want liquidity, but we want some extra liquidity here so that if we need to pivot, we can pivot into opportunity. Our touchstone, of course, is to be sensitive to and aware of the short term, but continue to execute our strategy for the long term. And with the conviction that with a portfolio that hits the mark on quality, diversification, and liquidity, that we're going to be able to ride through cycles. We're going to be able to ride through tough times. We did it back in 2000, 99, 2000, when the internet burst. We did it back in 2008. We did it in March of this year. So what we can't do is outsmart ourselves or try to anticipate, get in a guessing game, but have conviction that our approach, our long-term approach, the quality of our partners, the breadth of our partners, and the liquidity in the fund is what we need it to be. And I'm confident that all of that's the case.
Yeah. So you mentioned this, Mike. One of the great assets is you've always taken a long-term view for the university when it comes to our investment choices. But as you said, you have to be sensitive to short-term and midterm dynamics. Given where we're at right now, what do you see as some of the greatest risks and opportunities? And do you look at different asset classes or even geographic investments that you consider right now to either watch out for or take advantage of?
Sure, Lou. I touched on some of the key risks, and calibrating those is very difficult. I mean, what we're in the midst of clearly is a bit of a disconnect in terms of the real economy, if you will, versus where asset prices and markets are. And that's a function of trillions of dollars of stimulus, not just here, but around the world. So that's naturally going to create a floor in terms of asset prices. And it becomes a question of at what point does the real economy kick back in?
Right.
And there's pockets of that have continued to be very strong. Retail spending, housing, vehicle purchases. That's what's really interesting about the environment we're in and the nature of the pandemic is there's been clear winners and losers, not just within countries, but asset classes, industries, companies within industries. And some have faced complete shutdowns, revenues went away, and they're trying to get back on their knees, never mind their feet at this point. Others, of course, have found themselves with massive tailwinds. And real estate, for example, is a very interesting asset class today. Obviously, areas like retail, traditional retail and hospitality have been hit really hard. Other areas like industrial, warehouses, logistics have benefited mightily. An area like office is interesting, right? In terms of the work at home. When that comes back, there'll be a heightened sensitivity to density in office spaces. There'll be a heightened sensitivity to using mass transportation. So just one small example, we're thinking hard about what does that mean for urban high-rise office long-term. We know a lot of that space is empty today with workers remote. But when we have a vaccine, when things normalize, I think the exercise we're engaged in is what will the new normal be a year, 2 years, 3 years from now, and how do we position ourselves for that? There's lots of long-term opportunity. Clearly, the big winner here is technology, right? In terms of the adoption of technology, Zoom meetings and on and on, in terms of forcing people to learn and come up and embrace technology, in terms of food delivery services and people of our generation that may not have been as attuned or inclined to embrace some of this technology. So from our vantage point, we've been long-term venture capital investors for 40 years. We see enormous continued opportunity there. Be it data, so much of it revolves around data, capture, securing it, storing it, analyzing it, acting on it. But on down the line, that data means artificial intelligence, machine learning, robotics, and how all of that is going to wash across the economy. We see it in remote learning, distance learning, healthcare, telemedicine, personalized medicine. All of this is the result of massive computing power. Financial services. So there's not an industry that's not being impacted. I think that's apparent to all of us. But in that, there's just massive opportunity immediately, but more importantly, in terms of given the type of investor we are for the long term, who are going to continue to be the winners and the losers by sector, by industry, and by company.
Would you say, Mike, that the pandemic has accelerated the rate of change?
Absolutely. It's pulled it forward in a lot of ways. Since I started this job, Lou, 23 years ago, one of my first trips was out to Silicon Valley to get to know some of our venture partners at the time. And for those 23 years, it's done nothing but accelerate. Again, investing in technology today, there's core technology. When I talk about venture capital, right? Developing the software and providing the service. But each and every industry and company, their rate of digital transformation, digital adoption, we believe, and it's pretty clear, that's going to dictate who wins and who loses. So I think as time passes, nations and industries and CEOs, every company on the planet realizes that that's what it's about, how to harness this ever advancing and accelerating power of technology to attract new customers, to collect that data, to better understand those customers, to make better decisions, and ultimately to win.
So Mike, when you think about the growth of the endowment pool, to $13+ billion at this point, and you're trying to balance it. The larger it gets, it seems to me that the more difficult it would be to balance the endowment with excellent investments. Do you have like frameworks across the different asset classes, whether it be private equity, public equity, minerals and resources, et cetera? How do you think about over time, how you're distributing those investments?
Sure, Lou. Well, it starts, of course, with asset allocation. We're about 75% equities of a variety of stripes, private and public, U.S., non-U.S., emerging markets, but 75% a variety of equity exposures. We need to be, given our return expectations of inflation plus 5.5% to support the university, to preserve the purchasing power of the pool, but about 75% equities, about 10% cash and fixed income, and about 15% hedge funds and real assets. So that's our starting point. The consistency across all of those portfolios and 100 plus managers is the nature of the partners we're looking for. And again, we chatted about that. As we get bigger, while on the one hand, certain of our more niche managers where we'd like to give them more capital to invest and manage for us, that gets harder. With size and with scale, there's also opportunity. For example, we're still about 90% invested via funds that our partners raise. But about 10% of our endowment is now invested in co-investments and some direct investments, principally alongside our partners. But oftentimes our partners will raise a pool of capital. They'll want to build a diversified portfolio for us and all their investors. On occasion, they'll come across a larger opportunity. And they'll call an investor like us and say, hey, do you want to come in and invest alongside of us? When we were smaller, that was harder to do. Right. Today, we're in a position to do that. Mm-hmm. So with scale, there's challenges, but there's also opportunity.
Could you talk a little bit about the oversight? You work with an investment committee and the board of trustees, and many of the trustees have expertise professionally in a number of these different asset classes. How much do you rely on that board, and how much do they serve as a check and balance to you and your team?
Yeah, when people ask, what are our advantages or what makes us different relative to particularly a lot of our peers in terms of the top 20 endowments, we always start with the quality and stability of the investment committee of our board. We've had 3 chairs of the investment committee in the last 42 years. Bob Wilmoth for 15 or 16 years, Jay Jordan for over a quarter of a century, and Tom Maharis, who took the baton last year. That's amazing. 42 years and just 3 chairs of that committee. So in terms of the leadership and the consistency of our approach, I'm not aware of any other school that could come close to that. And then you layer on top of that, of course, Scott's 32 years at the helm, and the consistency and stability of the senior team here. So the quality of the investment committee of our board and the stability is really the tip of the spear for us. Mm-hmm. And yeah, when I think about the members of that committee, be it in Jay Flaherty in real estate, and on down the line in terms of the Jimmy Dunns and on, Ted McCourtney's and Phil Rooney's. I mean, it's just an incredible, incredible group. And I probably shouldn't have mentioned one because I don't have time to rattle off all 15. But right. The reality is it's a phenomenal group.
Yeah, it's one of the great blessings I think here at Notre Dame to have so many committed leaders that are volunteer so much of their time and energy to assist in the investment of the endowment with the great expertise that they bring. Tell us a little bit about the impact of the endowment. I think sometimes people think that it's just one endowment, when in fact it's like 6,500 or whatever the number is now, distinct endowments, often earmarked for specific purposes. But what has, over your 23 years, the impact on students and on the life of the university has grown immeasurably. Can you tell us a little bit about that impact?
Sure, Lou, and obviously thanks to the phenomenal benefaction of our alumni and friends. Again, this is such a wonderful partnership, and when those monies come in, suffice to say, we recognize the enormous responsibility we have in terms of managing the lifeblood of the institution. Today, spending off the endowment is roughly 30% of the whole operating budget for the university. Again, relative to our peers, really high and growing. And it touches every aspect of the university. Those 6,500 individual funds touch everything. I believe about a third of that spending is financial aid, right across the spectrum. So when I mentioned bringing our partners back to campus and walking them around the campus and introducing them to students so that they can see the impact of their work for us. That's what it's all about. You touched on it earlier, that the nature of what we do isn't just managing money for other people. We're managing family money. When people ask me for really what makes Notre Dame's team special, because there's been huge turnover in the endowment offices of most of the other large universities. And I always point to the fact that it's a mindset, it's a commitment to the mission, and we recognize we're managing family money. It's not other people's money.
Yeah, you guys have really stood out as different in the way that you have maintained a kind of a mission centeredness and a market sensitivity. It's been amazing to watch. We talked a little bit about how you choose some of your investment partners, but let's talk about how you choose people. What do you look for in team members? I think that pretty much everybody on your investment team is a Notre Dame graduate. So tell us, what characteristics do you look when you're bringing on people to kind of shape your team?
It'd be a lot of those 6 characteristics we look for in our partners, right? Brains, energy, integrity, courage, humility, discipline. And of course, we've got the advantage of the best undergraduate business school in America across the street. So we do teach, we do guest lecture, we do have interns. So we're just fortunate to have a fabulous pipeline. The key is, and of course we see this in spades with our students, is they're wanting to be a part of the mission. Again, given the quality of the students that we have here, our best and brightest have their pick. They could go to Goldman Sachs or KKR or McKinsey or wherever. And really looking for those kids who are ready for a few more years in South Bend and the South Bend winners. And we've had a very successful program where we bring in a student or two every year or two, and they're with us for 2 to 4 years, and then they'll go back to business school. They may join one of our partners, and I'm happy to say we've had a number then return to us and really want to be here for the duration of their careers.
That's terrific. So when Lou Holtz left as coach of Notre Dame, he said that one of his greatest learnings was that after he won the national championship, he tried to maintain that level of excellence. And he left thinking that he was tired of coaching. And really what he came to understand was that he was tired of maintaining. And that you cannot get the best out of a team if you just try to maintain excellence. You've got to set the goals, the bar higher. How do you keep your edge as a team that's been one of the most successful teams of the last couple of decades in all of higher education? How do you keep your edge? How do you still be willing to kind of take calculated risks and not just become old money? How do you manage that?
Well, it starts again with that keen sense of fiduciary duty and mission. Every once in a while, it's natural not to want to have to get on the plane and fly to Asia, right? To diligence and opportunity. And I think it would be really hard to do that day in and day out for a less mission-centered firm. But we know if we make a right decision or a wrong decision for an investment, it could have millions or tens of millions of dollars of implications, or in some cases, hundreds of millions of dollars of implications. So that makes it really easy to understand the gravity of our work. And you couple that, Lou, with just the realities of the markets. A day like today, heightened volatility, it's constantly changing. There's always new challenges. It's not static by nature. So we invest around the world. There's always tons of news flow. The challenge is a little bit more to filter it out and focus on what's important, focus on the long term. But that sense of recognizing that it's a very competitive investment world, and we're managing money for an incredibly important institution, frankly makes leaning forward easy for the team.
I love the kind of the intellectual curiosity that is involved in your work, right? I mean, there's a whole wide range of issues that impact what you're doing and investing the money, but you always bring it back to the mission, and that's terribly refreshing to see. Tell us, if you would, just 2 final questions. Is there kind of an important lesson over your 23 years here with the investment office that you'd like to share? And is there a role model who you continue to kind of look to for guidance, a North Star?
Um, in terms of investing, in terms of a role model, Warren Buffett. I know he's maybe the easy choice for a lot of people, but again, not just what he's done, but how he's done it, right? Staying in Omaha, doing it in a very disciplined, simple way, making note of the fact that the fundamentals of investing haven't changed. It's blocking and tackling. It's sensitivity to risk and value. It's thinking not just about return, but risk-adjusted returns. It's protecting your downside. So Buffett has not just been preaching that, but executing on that for 70 years. And it's worked. But again, years ago, one of the highlights of my time here was Father John, of course, being from Omaha, ran into Warren Buffett maybe 15 years ago at some function there, and he said, "I'd love to meet your investment folks." So a few of us went down and had an hour in his little office in Omaha. Again, that experience, Lou, just reaffirmed that essentially one individual in a relatively remote location, at least versus the major money centers, has done something incredibly well and unique. And again, some of those elements we talked about, doing it in a disciplined, courageous, his way. So in terms of not just myself, but I would say the office, in terms of what we aspire to, is that type of fundamental, long-term, committed, disciplined investment. And in terms of lesson learned, it relates to that insofar as this idea that there are no geniuses, that even Warren Buffett has had his mistakes and miscues. Investing is hard. Markets are hard. And we're fortunate to partner with the best around the world. But having partnered with the best, again, we see that it's much, if you get 60% right, if our managers get 60% right, they're going to do really well and really well for us. The bar is a little higher than being a major league hitter, where if you bat 285, you're doing well. But again, that recognition, that sensitivity, that we've got to get after it every day. The markets are hard. We've got enormous responsibility here. We've got some incredible advantages flowing from the institution that we're part of, the mission that we're part of, that allows us to win vis-a-vis a lot of other investors in terms of how we invest and with whom we can invest. So I think as long as we kind of focus on that North Star, and I just finish with simplicity. I've touched on a lot of the same themes, I think, in terms of a lot of the questions you've asked. Again, in terms of what we're doing and how we're trying to do it, we want to avoid complexity. We want to keep it disciplined and focused, long-term, what's worked, a playbook that we've developed over decades now. We got to keep getting better. But again, I think we're positioned to do that, thanks to the incredible support from the university, the incredible support from the trustees, the board, and the broader Notre Dame family.
Well, Mike, I have one final question, but I'm afraid it may be moot because I think you've already answered it in multitude of ways. But you've had opportunities to leave Notre Dame over the past 23 years and make multiples of what you're making currently. What has kept you here? I feel like I could answer the question just through this interview, and I know that so much of it has to do with the mission, but can you go, anything in particular you could tell us what has kept you here and keeps you going, working so hard on behalf of Notre Dame?
Well, Lou, thank you. But the same question could be asked of you and a lot of people here at the university. And when Scott offered me the opportunity back in '97 to come back, I had recently sold our business and was deciding what I wanted to do. I thought I'd start another business. But being a loyal alum and a finance grad, and I said to Scott, sounds fun. I'll promise you 3 years.
Mhm.
And I'm in year 24. So, and it is, it's the mission, knowing that, what we're doing is so important, engaging with the students. And it's, again, no more complicated than that. I frankly just couldn't imagine in not going to work. Obviously, there's a lot of good causes out there. There's a lot of great institutions. But in terms of managing the financial assets, the way we're able to do it, engage with the campus and the community, again, it's a dream job.
Mike, you've done such a terrific job, and I not only in terms of the way you have led the endowment and how it's performed superbly relative to our top peers, but the way you've done it. You've done it in a truly Notre Dame way, where you have embodied those values that you hold dear: courage, humility, kind of a groundedness, and a deep sense of mission. I'm proud to be your classmate, and I'm really grateful to work along your side in service to this mission. So thank you. Our prayers are with you, and I know that you keep doing great things for our students and for this mission for Notre Dame to be leaven for a world that is deeply in need.
Thanks, Lou. I'm blessed to be a part of this.
Thanks. We're going to be with you again next week. We'll introduce our guest next week to you early and electronically, but as we always do, let's close together, and please join in wherever you're at with a Hail Mary to our patroness, the Mother of God. Hail Mary, full of grace, the Lord is with thee. Blessed art thou among women, and blessed is the fruit of thy womb, Jesus. Holy Mary, Mother of God, pray for us sinners, now and at the hour of our death. Amen. Take care, God bless, and go Irish. Thanks for being with us.